Hey, what's up guys, Adam here, and as promised in this video, we're going to be going over my Trading 212 portfolio. Now, as I said before on previous videos, the purpose of this particular portfolio is to go towards a property investment venture. As I said in my goals video for 2021, my aim is to save up or contribute £5,000 towards this portfolio by the end of 2021. And the end goal, or my final contribution towards this property investment venture, is going to be £15,000. So there are three primary reasons as to why I use Trading 212 for this specific purpose. The first reason is that it is a mobile first and a mobile friendly application. So personally, I like to invest not just when I'm at home, but when I'm also out and about, and having the convenience of a decent app makes the investing process really easy for me. It just has a really good overall user experience. So the second reason then is down to Trading 212 having zero commission fees. So at the time of filming, you don't have to actually pay any commission fees to Trading 212. Now the commission fees on the front of it may seem like they're an insignificant amount, but when your portfolio, compounds and grows over time, those commission fees can really start to eat up into your overall portfolio. So it's always good to find a platform that has zero commission fees or very low commission fees. So the final reason then I've gone with Trading 212 is because it offers fractional investing. Now, fractional investing isn't really a new phenomenon now at this point. There's quite a few other platforms that do offer it, but the way Trading 212 actually does it, it just makes it a lot more convenient for me anyway, just compared to other platforms. So if you're ready to start investing and you're considering using Trading 212, be sure to use my referral link in the description down below, because if you sign up using that link, you'll be entitled to a free share. I will also receive a free share as well, so it's definitely a win-win situation there, and it's probably the best way to get your portfolio funded right out of the gate. So that sounds good to you, be sure to go ahead and use my referral link in the description down below. So before I get into the bulk of the video, I need to add a few disclaimers. So the first of which is that I am not a financial advisor. Everything within this video is for educational and entertainment purposes. For your own individual circumstances, I would advise that you seek qualified professional advice. I must also add that the stocks that I have chosen are down to my own individual circumstances, my risk tolerance, and my overall end goal for this portfolio. So please don't try to directly mimic or copy the exact stocks or ETFs that I have in my portfolio. I would advise that you actually watch my beginner's plan to stock investing so you can assess your own risk tolerance and find out what your end goal is going to be for your portfolio. So once again, please just don't copy my portfolio and what's actually in my portfolio. Please do your own research and find out what you want to use the portfolio for. Now, I do have other investment portfolios aside from Trading 212. In fact, my stocks and shares ISA is with Vanguard, which is part of the course as to why I can't have a stocks and shares ISA with Trading 212. I'm just using a general investor account, so I have that portfolio as well. And I also have a small cryptocurrency portfolio with Coinbase. It's very much a beginner's portfolio, so I'm still trying to do a lot more research into cryptocurrency. If at any point you want to see any of those two portfolios, let me know in the comment section down below, and I'll make a video showcasing both those portfolios. Right, so I think I've waffled on quite enough on this video already, so let's go ahead and jump over into Trading 212. Okay guys, so here we are then in my Trading 212 portfolio. Now, apologies in advance, I'm probably going to be looking down quite a lot, mainly because I'm reading from my phone, so do bear with me on that front. So okay, here we are then. So as you can see, so far I have invested £3,138.42 as of recording this video into the portfolio, and that is so far generating me a return of £310.53, and we're currently receiving a yield of 9.9%. Now, currently I'm filming this video when the market is open, so this is probably going to be fluctuating quite a lot whilst I'm filming this video, so that's just to bear in mind. If you see these numbers change, it's because the market is currently open. So the first stock that I have is Alphabet. Now, Alphabet, for those that don't know, is the parent company to Google and YouTube, as well as a plethora of other businesses as well. But Alphabet has been around for a long time, And Alphabet is what I'd like to call personally a lorry stock, or if in the US, a truck stock. And what that basically means is that it's a stock that's grown to such a large proportion that you don't really see any sharp growth from it. It just has a steady and slow growth upwards, and nothing really, affects the stock too much. As you saw in the last year when we had the pandemic, a lot of the tech stocks and the e-commerce stocks weren't really affected too much by the pandemic. They actually still proceeded to trend upwards, while everything tended to, take a hit with the economic uncertainty. Those stocks still tended to do fairly well. So the Alphabet stock definitely falls within that category. Now, I'm not expecting to see any major growth from the stock. I'm just expecting to see a nice steady growth there. It's a well-established stock, and therefore it definitely makes sense to have that in my portfolio. So the next stock that I have in my portfolio is Alpine 4 Technologies. Now, this is a company that specializes in automotive transport and electronic manufacturing. Now, the interesting thing about this stock is that I actually bought it when it was a penny stock. Now, penny stock is a stock that has a share price under the value of $1. I actually bought this stock when it was worth 38 cents, and I bought quite a few shares in this stock, as you can see. I'll put the necessary conversions up on screen so you can see what that converts over to in pounds. But this is a really interesting stock, and over the last few weeks it has been growing quite sharply, mainly because they've actually gone into the drone market now. So yes, Alpine 4 has recently gone into drone acquisition, and as a result their share price over the last month has completely skyrocketed. It now has a value of $3.64, which is a massive jump from where its original share price was. In fact, I actually bought it when it was a lot higher than when it started. It's actually worth under a penny before I actually bought into it, before it was actually worth 38 cents. So it has grown tremendously. If you actually invested in this particular stock when it was newly established, and if you invested quite a large amount in there, you would have seen a lot of pretty high returns from this stock. So very interesting stuff there, and it'll be interesting to see where this particular stock goes within the next year. So my next stock probably needs no introduction. As you can see, it is Amazon. Now, Amazon, as we know, has completely dominated and continues to dominate the e-commerce market. It survived the dot-com crash of 2000 and has simply just grown from strength to strength over the last 20 years. Now, of course, the share price of Amazon is incredibly high. As you can see, that's why I have a fractional amount there, as you can see on screen. But I think Amazon is definitely going to be going places in the next 10 years. I don't think it's going to be going anywhere, and it definitely makes sense for me to have it as part of my portfolio. Now, I'll say all this whilst the stock is currently in negative values. Currently, it's showing minus 2.54, but of course, these are just day-to-day changes that tends to take place. And in fact, if it stays negative as it is, I might actually buy into more. I might just do a bit of dollar cost averaging there. So I might actually just buy into some more Amazon shares whilst it's still technically undervalued, and see what happens over the next couple of months. But so far, I think Amazon is definitely a great stock to have. As I said before, it's one of those lorry stocks, as I said before, I like to call it a lorry stock. One of those stocks that you're not going to see, sharp increases from it, but you're definitely going to see a lot of gradual increase from Amazon. As I said before, I don't see it going anywhere anytime soon. And you'll probably realize now when you look at my portfolio, it's definitely weighted more towards the tech and e-commerce spaces. So the next stock that I have, again, probably doesn't need much introduction. Of course, it is Apple stock. Now, as I said before, Apple, again, just like Amazon over the past 20 years, has just been doing amazing things, just going from strength to strength. Again, it is quite a large stock at this point, probably not as large as Amazon in the sense of how sharply it's grown over the past 20 years, but it is one of those stocks that are probably not going to see any sharp growth coming forward, but we're definitely going to see continued gradual growth as the years go by. Apple is one of those stocks, again, I don't think it's going to go anywhere anytime soon. In fact, I think they're going to be dipping their toes into driverless cars, so we'll definitely hold out for the next few years and see where that goes. But as we know, Apple, completely revolutionized the smartphone, and they've been able to hold that corner at least now for the past 13 years. So Apple, definitely a good stock and makes sense to have it in my portfolio. So the next stock that you can see in my portfolio is from Boeing. Now, I did want to have some airline stock within my portfolio, but I wasn't sure which airline to go with. So I decided, why not just go with the manufacturer who makes the planes for, the airline companies. And then I came across Boeing. I could have also gone for Airbus, but I decided to go with Boeing in the end. I think they have a larger hold within the aircraft market. Now, understandably, Boeing, it currently is undervalued for obvious reasons. As you know, as you can see when you look at the graph, if we look last year, it took a huge tumble in March for obvious reasons last year, and it is still not made a great recovery over the last year. So I think currently this stock is still undervalued, and therefore I'm going to be making quite a few contributions over the year whilst the stock is still undervalued. But I'm hoping that as we start to head towards normality, now I think I've kind of used the word normality too much on this channel already, but I'm hoping that we do get to some sort of normality, then this stock price for Boeing, whilst I've already invested, will start to increase over the next couple of years. I think it will take some time before the airline market recovers. So let's go ahead and take a look at my next stock. So my next stock is iShares Automation and Robotics. Now, this is going to be another futuristic stock that I want to have in my portfolio. As I said before, my portfolio is definitely weighted to the e-commerce and tech space, so it definitely made sense to have automation and robotics within my portfolio. It is a relatively low valued stock at the moment, but I think we're definitely going to see a lot of increases from this particular stock. Of course, in the next 10 years, we're definitely going to be seeing a lot more in the way of robotics and automation within the work field, and within pretty much every other space that you can think of. There's going to be some element of automation within there. So I think it definitely makes sense to have this particular stock within my portfolio. So the next ETF that I have within my portfolio is probably the holy grail of funds, and that is the renowned S&P 500. Now, the S&P 500, as I probably mentioned before on this channel, is the top 500 performing stocks within the US. Now, the S&P 500 has a great track record, probably coming up to 90 years now, where it has just seen a positive trend year on year. And as we said before, the US tends to be where we find the best and highly performing stocks. So it definitely makes sense to have the S&P 500 within the portfolio, especially within my portfolio, because I know that it tends to be the US where, as I said before, the best performing stocks and the long-term stocks tend to actually appear from. It just tends to be in the US. So of course, I have quite a high volume of my investment portfolio invested within the S&P 500. As you can see, the S&P 500 did take a tumble last year in March, of course. But of course, what's really held the S&P 500 together is the e-commerce and tech stocks within it. I think without those, it wouldn't have recovered as well as it has. So as you can see, over the last year, it has actually made a swift recovery given the economic circumstances last year. So the S&P 500 then definitely a worthy candidate within my portfolio. So the next ETF then within my portfolio is the iShares Developed Property. Now, this is picking the best developed countries that have a good property market. Now, these type of investments that we see here are actually called REITs, also known as a real estate investment trust. These are trusts that have a large portfolio of properties. We're talking, several hundred or even in some cases thousands of properties, and this is probably the most efficient way that you can get your hand within the property market without actually physically owning or actually going out and buying property yourself. So what you're effectively doing then is effectively paying that company to buy or invest in more property, and from that you receive a return based on the amount that you've contributed. So a great way to get your hand in property investing without actually owning any property yourself. So the next ETF that I have in my portfolio is the FTSE 250. Now, the FTSE 250 is actually seated beneath the FTSE 100. So the FTSE 250 is the 250 companies beneath the top performing 100 companies. So kind of think of it as, say, in football, where you have the Premier League, as say that would be the FTSE 100, and the Champions League would be the FTSE 250. So of course, any of these stocks that perform really well and super exceed the FTSE 250, they can actually move up into the FTSE 100. Any stocks that are performing really poor in the FTSE 100 will move down into the FTSE 250. So in the FTSE 250, you're going to find a lot more of these small cap companies, the small and mid cap companies. So you really want to have a handle on these companies, because whilst they're still going to have a bit more volatility than the ones in the FTSE 100, we may see quite a lot of growth and exponential growth from stocks within the FTSE 250. So definitely makes sense to have this in my portfolio. So my next ETF is the iShares MSCI, and this is an emerging market ETF. So once again, we're going to see worldwide emerging companies. So these are going to be more of your smaller cap, volatile companies. Now, personally for me, I don't mind having some volatile companies in my portfolio, because once again, I'm holding this portfolio for a much shorter term than probably the average person watching my video. They're more likely going to be holding their own portfolio for the long term. So of course, having some of these volatile stocks are going to help push up my average and push up the volatility and the risk factor of my particular portfolio, just so I can get a bit more growth depending on how these stocks perform, a bit more growth than I would do if I was to just have more of the risk-less kind of stocks, the ones that tend to be, grow a lot slower or tend to have a lot less risk associated with them. So I don't mind having some of these high-risk volatile stocks and ETFs within my portfolio, but of course your mileage may vary. So my next ETF again is going to be another volatile one in the grand scheme of things, and that is the iShares MSCI World Small Cap. So once again, we're tracking the best performing small cap stocks around the world. So once again, these are going to be more volatile than your mid and large cap stocks. But as I said before, I don't mind taking on the extra risk associated with these stocks. So I want to have at least some diversification within my portfolio into some of these higher risk ETFs and stocks. So the next ETF on my list is iShares Physical Gold. Now, granted, I probably should have a lot more invested within this particular ETF, but the thing about the gold and the silver market is that when the overall market is doing well, then gold and silver and other precious metals tend to do fairly poorly. When the overall market is doing poorly, then the precious metals tend to actually increase in value. We saw it last year when we had all the economic uncertainty, people selling off all of their general stocks and pushing it all into precious metals like gold and silver. So it definitely does, it really is good to have some element of that security within your portfolio, just to balance your portfolio out in case the market tends to take a turn for the worse. By that point, then your other securities like your gold and silver will still be doing fairly well. But as I said before, I probably should have a lot more gold within my portfolio, because I'm deciding to take on a much higher risk with this portfolio. I don't mind having less gold in there. So the next ETF that I have in my portfolio is the S&P 500 Information and Technology. Now, this is basically going to be the top performing 500 tech stocks within the US. And as we know, I said before, when I was doing the breakdown of the S&P 500, it's actually these tech stocks that are essentially holding the ETF together, especially in times like these. These tech stocks are pretty much unaffected given the circumstances that we had last year. They continue to grow even despite what was going on with the rest of the market. So I said before, technology is the future, and it's definitely going to be these companies that are going to be part of that future with us. So that's why I say it's definitely good to have a lot of tech exposure within your portfolio. It's definitely the reason, not only because I have a passion for technology, but also because I genuinely think that this is where we're going to be going within the future. Therefore, it makes sense to have a good investment within these technology stocks. So my next ETF then is the iShares Small Cap 600. This is going to be the best performing small cap companies within the US. As I said before, it tends to be the US where the best long-standing stocks and companies are found. So within this 600, you're probably going to find, the next Amazon, the next Google, the next Tesla. These are going to be the best establishing small cap stocks within the US. And once I said before, these are going to be very volatile. So again, your mileage may vary depending on how much you want to expose yourself to the small cap market. But for me, I don't mind having that extra high risk given these circumstances of my particular portfolio. So my next ETF is the iShares UK Dividend. I definitely wanted to have some dividend stocks within this portfolio because that's probably the best way to get to passive income, is to have those high dividend paying stocks. So the iShares UK Dividend essentially tracks the highest paying dividend stocks within the FTSE 100 and the FTSE 250. So it definitely makes sense to have this within my portfolio. So the next ETF that I have is iShares UK Property. Again, this is going to be a UK based REIT. And once again, like I said before, you're essentially investing this time just in the UK market, within the UK property market, and trying to get a return. So once again, this is probably the best way to get exposure and the most efficient way to get exposure within the UK property market without actually owning any property. So once again, since I'm based in the UK, I definitely want to expose myself to the UK property market. Now, as we can see from the tracking data, the iShares UK Property did take a tumble back in March last year, as well as a lot of other REITs as well worldwide. So I'm definitely going to be investing more within the iShares UK Property, whilst I still believe it is undervalued. However, I have heard of rumors that we are or could potentially be reaching another property crash here in the UK. So I'm definitely have to keep my eyes on that over the next couple of years. So the next stock that I have in my portfolio is Lithium Americas. Now, this is an interesting one because, as we know, not only are we going to be seeing an uptake in electrical cars in the next 10 to 15 years, what do electrical cars need? Lithium. So that makes sense to have lithium as part of my portfolio. So not only do we use lithium for our handheld and portable electronics, lithium is also going to be used within the electric car market. So it definitely makes sense to not only have electric car stocks in our portfolio, but also the components that make up those electric vehicles. So the next stock that I have in my portfolio is Lloyds Banking Group. Now, with the thing with Lloyds, that I wanted to have at least one bank within my portfolio, and Lloyds is one of the biggest banks within the UK. As you can see, it's definitely undervalued at this current moment in time. It is technically also known as a penny stock because its share price is technically under $1, or in our case, £1. And it is definitely undervalued. As you can see, today's value, it is only worth 35 pence. But I know on average, it has been up as high as 84 pence. And if we go to the yearly average before, of course, we had the big market crash, it was sitting around about 55 to 60 pence. So I know there's going to be some growth in there over the next couple of years once it recovers. So I want to actually see that growth. Therefore, I wanted to make sure I buy into it while it's fairly low, with the hope that it's going to grow over within the next few years. So the next ETF that I have is another dividend or high dividend paying ETF, and that is the SPDR S&P UK dividend. So it's another UK paying dividend, but this one is slightly different to the iShares UK dividend because it doesn't just track the highest performing dividend paying stocks in the FTSE 100 and 250. It simply just tracks the highest dividend paying securities within the UK. So that'll just give me a bit more exposure outside of the FTSE 100 and the FTSE 250. So the final individual stock that I have in my portfolio is Tesla. Now, Tesla has grown substantially over the past 7 years. I mean, if we take a look at the overall tracking data, we can see it's grown over 3,000% since it was established. Now, Elon is doing great things. As you can see, we can see had his whole SpaceX thing going on. He's dipping his toes into various different entities. So I don't think we've seen the end of Tesla as of yet. I think we're going to see a lot more growth within the next few years from Tesla because they've always got something interesting going on. So a lot of people listen that Tesla has pretty much hit their growth wall. I don't think so. I think we're going to see a lot more from Tesla within the next 10 years. So my next ETF that I have is the Vanguard FTSE 100. Now, as I said before, the FTSE 100 is basically tracking the best performing stocks within the UK, the top performing 100 stocks. This will be the Premier League of stocks in the UK. Now, as I said before, the FTSE 100 has not really recovered too well since the economic meltdown in March last year. It's slowly grown over the past couple of months, but it has not grown as fast as, say, the S&P 500. It has really struggled to catch up where it was. Now, I think it might be in more dire straits coming forward, especially based on how this Brexit deal is going to take place. I think that's going to, shake up the FTSE 100 a bit even more so. But we will see. We'll see if it actually gets back up on its feet by the end of this year. But once again, since I'm based in the UK, it would definitely make sense to have some investment here and therefore I have some investment within the FTSE 100 within my portfolio. So the next ETF that I have is the FTSE All World. As you can probably guess, it pretty much tracks the entire world. Now, granted, it is weighted quite a lot towards the US, mainly because that's pretty much where the majority of the growth comes from. But the best way to get exposure across the world is to have a ETF like this that is tracking over 3,000 companies, the best performing 3,000 companies worldwide. And I definitely want to have this as part of my portfolio to almost act as the resistance. So of course, as I said before, I've got quite a few high risk and high volatile stocks in my portfolio. So an ETF like this will kind of act as a resistance to make sure that volatility doesn't get too out of hand. Now, I also have the FTSE All World High Dividends. So this is not really a growth stock per se. This is going to be tracking the best and highest paying dividend stocks worldwide. So before, the All World was just tracking the best growth stocks worldwide. This is going to be tracking the highest dividend paying stocks worldwide. So once again, as I said before, the best way to build that passive income is to make sure you have high dividend paying stocks as well as growth, but it's also good to have those high dividend paying stocks as well to get the best amount of passive income that you could potentially get. So the next ETF that I have is an interesting one. It is the Vanguard FTSE Japan. Now, a lot of times when people do investing, you tend to forget about countries like Japan. And remember, Japan is where, you know, you're going to find Sony, Nintendo, Canon, Nikon, and these aren't small companies. These are big companies that have their product worldwide. So you definitely want to have some holdings within Japan because there's quite a few large companies coming out of there. So I wanted to make sure I actually have that as part of my portfolio. So the penultimate ETF that I have is the FTSE North America. Now, I already have quite a lot of exposure to the US already, but the difference with this particular ETF is that it also exposes me to Canada as well. Now, Canada, again, is another one of those countries that tends to get pushed towards the back when it comes to talking about investing, but it is really important that you expose yourself into these markets to make sure you can be getting the best diversification possible. That is pretty much why I have this particular ETF in my portfolio. I want to have as much exposure worldwide as possible. So the final ETF that I have in my portfolio is the Vanguard S&P 500. Now, you probably realize that I've already got the iShares S&P 500, so why have I got two? And the reason at the time, or my thinking at the time, was that because the iShares and the Vanguard trackers are slightly different, I could probably try and get the best average from the two. It made sense at that time. It probably doesn't really make as much sense now as I've learned a lot more about investing. So I may end up selling one of them and reinvesting the funds elsewhere within the portfolio. Let me know in the comments what you think I should do, whether I should just sell one and then just reinvest the amount back into my portfolio, or whether I should just hold it out for the long term and see what happens. I'm kind of in two minds, not quite sure what I should do, whether I should just sell it and then just reinvest it, or I should just leave it for now since I've already got those holdings. Let me know in the comment section down below. So anyway, guys, that has been my Trading 212 portfolio video. Once again, if you're looking to sign up with Trading 212, be sure to use my referral link in the description down below. My plan is to actually do these videos 3 times a year, so maybe tri-annually, so you can see the progression of my portfolio and to see how the portfolio is doing overall. So if you enjoyed the video, you know what to do. Smash the like button down below. And you want to see more videos like this based on personal finance, investing, or monitoring my personal journey to financial freedom and wealth building, be sure to hit the subscribe button down below and hit the notification bell so you get that ding-a-ling-a-ling when I actually upload videos to this channel. Anyway, guys, it's been Adam here. Thank you for watching. Take care. And of course, I'll see you guys in the next video. Bye for now.